Hey Scott, how's it going, buddy?
All right.
Good, good. Jamie, how you
Gentlemen,
doing?
I'm doing well, and yourself?
Oh, not bad, not bad. It's cold here in Texas, but yeah, I'm comfortable with a nice little gas fireplace here beside me and a and a Christmas tree, so all's
Yeah,
good.
hey, there's nothing like living somewhere where you actually have season changes. It's a little cooler here in Cali at night, but it's a welcome change. Let's just put it that way.
There you go, there you go. All right, guys, traders out there, thank you so much for joining us today. We have some good stuff to bring to your attention here, and we look forward to getting to it. Let's just hop right into it. Before we do, let's cover our legal things we have to take care of here. Just to remind everybody, guys, this webinar is for educational purposes only. Nothing you see or hear today should be construed as investment advice. If that's what you're seeking, you might want to find a registered advisor or a stockbroker, somebody who's licensed and can provide that information for you. But we will have some real exciting alerts to talk about. We want to talk about Holly today and some cool stuff. And so let's just dive right in. Switching it up a little bit today. We normally talk about all our support and education, but we're going to jump right into the agenda here today. And first, we're going to talk about the market recap. And I'm going to talk about a phenomena that you may only see a couple of times a year, and it's called, I'm going to call it one eye on the VIX. I'm always watching the VIX just to kind of, sometimes it can tip its hand in what the overall market might be about to do. Anyway, yeah, we're going to jump right into that in just a minute. Then we're going to talk about, actually I'm going to switch that up a little bit. Before I pass it over to the Holly recap, I'm going to revisit that alert that I shared with everybody last week. And don't worry if anybody's in here and did not get that. I will be sure to drop it into the chat window so you can have, those who have the software will have access to this this alert, because it's a pretty good one actually, and I'll talk more about that moving forward. And actually that new swing scan, I'm sorry guys, I forgot to take that out, but basically it's the same alert, and that's what I'm going to talk about. So I guess in essence it's still a new, relatively new swing scan, so we will be talking about that. Then Jamie, I'm going to let him take over the reins, and he will go over the Holly recap. Holly had a decent day, almost up more than $3 on risk on, and it has been kind of a risk on market. So some great trades in there today, and Jamie will highlight a few of them for you and go over how you may have negotiated that trade. But with that being said, I am going to just push forward here, and before we talk about the spiders, well, I guess I can kind of talk about the spiders while I do this, but very explosive parabolic move we're having, especially in the diamonds in the IWM. But I wanted to point this out, guys, because if you see going back here in the 1st of June, this was the market attempting to break out, nothing like the push we're seeing right now, but nonetheless, kind of a breaking out of a range. I didn't scroll out far enough. You got to take my word on for it because it's trying to break out. But on this day, this was actually the first week I came on board with Trade Ideas, and I filled in for Barry for a week and was trading live. But pretty much the same thing that Barry's doing. I did for a week in that room. And I noticed on this occasion the spiders were continuing to break out and hit a high, but at the same time, if you look at this, this was the 6th and the 7th of June, okay? And if you take a look at what the VIX was doing at that same exact date, this was the 6th and this was the 7th. So even though you had the market continuing to push higher and higher and higher, 2 days in a row there, the VIX was finishing up. And I remember, just like it was yesterday, telling the guys, I normally do not trade the UVXY. If you guys don't know what that is, it's the ultra inverse of the VIX, or I shouldn't say inverse, it's the ultra VIX. So it's like 3 times weighted, and you get these crazy exponential moves when you get a move in the market. but I'm just using the VIX today. It's a little bit more easier to read on a chart. But anyway, I told him, I said, very rarely will I play these toxic ETFs, and they are toxic, and I don't recommend anybody trading these on a regular basis because you can see they're designed to take money from traders. They're great for intraday hedging. Intraday, if you have a big sell-off in the market, you can make some really good money playing the VIX. But other than that, hold them. I very, very seldom do it. I might do it once a year, and this was one of those times where I did it because I said to myself, you know, the market is moving higher, but the VIX is moving higher with it. So that tells me what's happening is a VIX is an indicator of how much put volume is coming into the market. Okay, so when you see the VIX moving up, that means people are buying puts. In this case, the market was breaking out. Obviously, people were probably not buying puts to short the market. They're more than likely they're buying puts to protect, to hedge their longs. But a lot of times that can prelude a bigger move in the market downward. And you can see here as I go back to the spiders on this day right here, when you saw the VIX finishing up 2 days in a row, and yet the spiders continued to push to highs. Well, you can see what transpired after that. There was a pretty decent sell-off in the market, and of course, with that happening, you had a pretty nice move in the VIX moving forward, moving higher. And of course, that ended up that week being one of my. I actually did end up being my best trade by far because once again I bought it as a swing, small size, UVXY, but that's not the reason I'm telling you that to brag that I bought it and I made this trade. What I want you to get from this, guys, is I'm seeing the same kind of stuff going on right now. So I'm going to back out here and pull up the spiders. And you can see there, we're just having just a parabolic move. Let's take a look at the diamonds. Same thing, pulled back and just will not stop. This is crazy. Very seldom do you see action like this, guys. It's what you call a parabolic move, IWM. Qs haven't got there yet. They're still working. Something you may keep an eye on because if the market does continue higher and the Qs can break out of this range right here, it's a pretty good little area of resistance right here, so you might want to mark that up. Okay, if you have price alerts, you can just do that and just hit save, and it's going to draw you a little price alert above that high right there. Something you might want to mark up because a lot of times you get explosive moves other than technical reasons only. It doesn't have to be anything but technical, and this would be if you get the rest of the markets continue to push like this and you do get a lagging index like the Qs breaking out, it could be parabolic. But going back to the VIX, same kind of phenomena here. Let me scroll back. This was yesterday, when the market was up, Dow was up over 300 points. You had the VIX that actually finished positive on the day. Okay. Today, tried to get going, pulled back, ran up, pulled back. Still, I think, finished up on the day. So you got 2 days in a row now that the market has finished up, and yet the VIX is still hanging in there and finishing up with it. So just kind of keep an eye on that. I wanted just to bring it to your attention because there's many times where this, like I said, can be a prelude to a bigger, more dramatic move to the downside because especially when you've had a move like this, people will be quick to take profits. So just keep that in the back of your mind and keep one eye on the VIX to see if it does try to push higher. All right, guys. So that with that, yeah. But other than that, this is still a very, very bullish tape. You look at some of the movers that's really pushing the Dow, along with the industrial stocks. I read the other day where Goldman Sachs and J.P. Morgan has made up about 40% of the diamond move. Both of those stocks are in the Dow 30. And look at these moves you're seeing in the banks. And in Goldman Sachs, yeah, to see a big lumbering financial company like that, see that kind of alpha, that's the kind of stuff you see in dry ships, and to see like a big mega cap stock like Goldman Sachs with that kind of push is just well, you just don't see it very often.
Yeah, Andy, that's what Steve likes to refer to as the train has left the station pattern,
Well, yeah,
right? And just about everything
absolutely,
is looking like that, with the exception of the Qs that we saw earlier. Of
right.
course, there's many, many stocks that have not left the station as well.
Exactly, exactly. This is a very good point, Jamie, because I don't, a lot of people like to buy the stocks that are very strong because they're just going to get stronger. But, when you get conditions like this and you feel like you've missed the parabolic move, look for some of the laggards. They're out there. And I'm going to talk about more about the pullback alert that I brought and the trend change lubricant. Steve makes a lot of shares a lot of and Jamie shares a lot of the price alerts off the trend change lubricant. There's been some incredible call, and I'm going to let Jamie and Steve talk about that next week because they had some really good ones this past Monday. So yeah, keep an eye, guys. These alerts, they're just, boy, there's this made to find opportunity, and you can configure them to find opportunity, much like the alert that I did last week, the trend change lubricant. Jamie, I think, has had a really good one here that he's going to actually update here with a new set of symbols coming in just to make sure it's fully optimized. But this Turbo Brakes up SPY 50 has been, boy, I've just seen incredible amount of opportunity in that. So if you guys, if you don't have that, we'll talk about how to get that because you do have to have a symbol list that goes with that. But anyway, moving on, let me pull this up. Just be careful because when you do, it is Christmas time, and this is the mother of all Santa Claus rally, and it's really coming early, and boy, I don't know where we're headed, but when I see the VIX acting like that, be careful because we could definitely see a pretty decent pullback in the market because.
Hey, Andy, real quick here, especially for the newer people. Why don't you kind of break down, okay, the VIX is what exactly? What's the VIX telling us in general, the indicator, right?
Yeah. What the VIX measures the amount of put activity coming into the market. Now, you can't really, these ETFs, I said, they're toxic, so they're not a true picture of the VIX because they have what's called decay, and I really don't want to get into the reasons why they decay, other than to take your money. People don't know any better, and that's why I say do not trade to hold these things very long. I think that's the only time I swung UVXY the whole year, and the only reason I'm doing it, and I'm gonna pull back up this. Let me pull back up is right over here, is I'm defining my law. My risk is so limited to the downside because I have a market that's moving higher, and yet the VIX is moving up higher with it. Very easy trade for me because I'm taking a position, on this second day. If it takes out this low going back this day, I'm out, okay? But I know if this VIX is holding up well, with the market moving higher, I know the first downdraft we get, I'm going to get an explosive move, and I did. So, but to answer your point, to answer your question, the VIX is kind of a sentiment indicator of the overall market, and it tracks the put volume. It's based on the amount of put activity that's coming into the market. Puts go up,
right.
VIX go up. So that's why you can have a market that's going up, but the VIX going up with it, because you have people that are here's probably what's happening. You have people chasing this market higher. They're afraid they're going to miss a move. Going into the new year, new president, everything's looking good. Oh, the train has left the station. Gotta buy. Okay, what's happening is, so you got that pushing the market up, but you probably have smart money that's been in the market, and they're saying, okay, I am hedging coming into this. So the way they hedge is they start buying puts, lots of puts, to hedge their long positions. And that's why you have this strange phenomena of the VIX going up with the market. And it only happens, usually about a couple of times a year. And So that's just old trader advice. I mean, getting a little bit away from our software, but that's fine. We want to provide more value because we all are professional traders, and we want to give you more value than the software. That's hard to top, but we try to throw in some good old coaching in here as well. But it's just like just kind of know where the VIX is, because when you see this phenomena, just be aware, especially if you're long a bunch of positions, that hey, first sign of weakness, I'm going to either hedge or I'm going to start getting out of some of my longs. But all right, moving forward, guys.
Let's go, Beanie.
Oh, thanks, Jamie. Moving forward, I got to go back to present. And we're going to talk about, I'm just going to hit back on this alert that I introduced to you guys with the help of a guy that I had on a one-on-one session with. And this was last Thursday at the close. And this was when we had our last webinar that I hosted. And I gave you this alert, and this is how it closed last Thursday. Last Thursday was 12/1. And these were, and I'll pull over the alert here in a minute and show you with the filters for some of you guys that haven't seen it. But this is what came through, and I went through and just looked at some of the charts, because I want you guys to come in here, and if you have the software and you get these alerts, to if you don't start putting them to use right away, maybe just mark them up to see how effective they are, because you want to go back and study to see how well it works. I always do that when I build an alert. I go back in the history, and I study how well it performs. It's hard to back test, everything. Well, you can't back test a top list anyway, but I always go back and do my homework and do my history and see how well it works. Well, this was Pier 1, and guys, trust me, I get it. I know a lot of you guys be thinking, like, yeah, look at the market, dude. Anybody could have bought. But I want to show you, I think you're going to see the entries and realize I'm not just telling you this because a lot of these alerts perform very, very well, but they are very, very good risk-reward trades, and that's what you want to put yourself in a position to do is have some great opportunity to the upside, but just downside limited. So just going through some of the trades, and I went through from top to bottom. I didn't put every one of them in there. A couple of them didn't work. Some of them just barely worked. But just give you an idea of what we're looking at. This is Pier 1. Okay, this is the first, the day it went off. You can see the alerts looking for stocks that are pretty much in a bullish trend, but trading at the lower end of their 5-day range, but close. This is what we call the setup candle again. They close within 25% of their high of the day. If they only close 50%, they don't make the cut. They got to close on this setup bar 25% from the high. That's Pier 1. Okay. This is 5. This was actually kind of, I put this up there because it was a gap up. It worked, but really, I wanted to show this because I want you to beware, just not to buy everything if you get a huge gap on it, something like that. Sometimes they will work, but it's when you get, a $4 or $5 move, it's kind of scary. I let them play up. That being said, this is one to watch going forward, because if you do, they tried to pull back, could not close the gap. This is one you might want to mark up. If it gets above this high right here, could be some clear sailing. This is my favorite, man. This is just a beautiful one right here. This one right here, close, came down, stair step down. Beautiful bullish flag right there, and then look at that, boom. Small cap stock. This is not going to trade that much with the market. This is just that's just a beautiful setup. Triggered at the high of this candle right there, boom. CLDT, same kind of setup. I wanted to show this one because it's your setup bar. Okay, your out would be the low of this bar. So even though it ran up and pulled back, you would still be in this on a swing trading alert, and it'd be performing for you. WOR, once again, pretty good setup. Filled the gap, and right there, filled that gap, came up, you buy it. No real pain. Moving higher. Another one. You're seeing the same pattern here. And once again, I do realize the market has been very strong, but the point I want to make, these are very good risk-reward trades because it's defined. I had a session with a guy today who was using stock ticker and auto trading on IB, and he was trying to plug all this stuff in, and I showed him this alert, and I said, listen, this is what you want to focus on because you can do your homework the night before because once again, your setup bar is going to be the close of this day. So you can come back in that night. You can get on your stock ticker if you're using automated trading through IB. Okay, if it takes out that high, you use a limit buy because you don't want to get HFT'd up, so always use a limit buy. And then, then you put your stop in below that bar. Oh, I'm sorry, I moved on to the next one. Lower this bar, and that's the kind of stuff I like to use if I'm auto trading, which I haven't done, but Jamie's done plenty of it, that's for sure. Here's KR, okay, another beautiful little setup there. Went through, suckered people in, all-time high, pulled back, got the lower end of its range, finished at 25% from high, nice little breakout. And I think that's it. And what I'm going to do is pull this, close this down now. I'm always going back and forth here. Here's the alert, guys. And what I will do is drop this. I'm going to go over it. It's a very simple alert, okay? Remember, I'm sorry, I call it an alert, top list. It's a top list. A top list doesn't have an event, okay? There's no alert in here. It's all filters. You look at the configuration. There's no alert window up here. Nothing but filters. Price range, average daily volume. Some of the best alerts are not real complicated. Position in 5-day range, that's where the max is 25%. So it's pulling back on a 5-day, on a chart if it's in the lower part of its 5-day range, and it has to be below the max of 25%, which means it's 75% from that 5-day high. It has to be above the 50-day moving average. That's the kicker. I don't want stuff that's just falling out of bed. I still want it being above the 50-day moving average. And the daily range right there has to be 75% from its lows on the day, which means it's 25% from highs. So, like I said, not a whole lot to it, but it will, put some really good. Let's take a look at some of the ones that came through today. Now, when you have a market that's parabolic like this, you're not going to get as many good setups. Okay, this filter is going to work for better when the market is kind of settled down, maybe pulled back, let some setups develop again. But even still, this REI, I thought, pretty decent there. There you got a stock that's, close to multi-month high. Let me just see how close. Yeah. And then pulled back 3 or 4 days. There's your setup bar right there. Rare. Very nice. Look at that. Nice pullback after hitting multi-month highs. A lot of pain. People coughing up shares. And all of a sudden you got a nice little hammer. Just nice little risk-reward trades, guys. And there's another one with potential. Even though it looks pretty crappy on the daily as far as, sloping down, it still has to remember it has to be above its 50-day moving average. And as you can see right there, it's only 2% from its 50-day moving average. So maybe building, base and going to move higher again. So I'm not going to go over too much more of this. I am going to drop this into the window because we do have some exciting stuff to talk about with Holly today. So guys, what I'm going to do is save and share this. This is how you do it. You just right click in there and you find the little cloud and you do save and share. Very simple. Copy all. And then I'm going to post it into the chat here. And I'm going to call it P/B pullback above 50 SMA. Send that. And now I'm going to copy and paste it in there. So it's in there, guys. For those of you who have the software, take a look at it. Pull it up and take a look at it and do your homework. It's a great homework top list. Well, Jamie, I'm kind of losing my voice over here. You be about ready to take over and talk about Holly a little bit?
I believe I can do that.
All right, buddy. If you want to just take the control there and Take the
Yeah, let me
wheel.
know when you
Jamie, take the
have
wheel.
eyes on my desktop here.
I got it.
All right, very good. So Holly, wow, what a nice little day she ended up having today. On the risk on mode, up a little over 3 points on a grand total of 23 trades that were issued by Holly today. So as you can probably guess, without even looking at the data, 20 of those trades were longs, but she did crank out about 3 shorts in the power hour short. It was kind of a scratch, depending on how you handled the trades. There was a little bit of alpha in there, but not a whole lot. So we'll take a look at those shortly. As far as her trade count today, or excuse me, her strategy count, we had a grand total of 13 strategies make the cut for today's session. 4 of those were longs, and the rest, the other 9, or excuse me, 4 were shorts. It's opposite day. The other 9 were longs for 13 total strategies. And what I'm really liking about the data set that we're seeing right here, once again, is the distribution of trades. You know, we can sort by any of these metrics here, which ones did the best on a win percentage basis, which ones didn't do so good on a percentage basis. But in any case, I really like seeing when many strategies fired nice amounts of trades. There wasn't one strategy today that did 20 or 30 trades. We've been working on getting Holly more and more of an even keel. Today is really a good example of that. So each and every strategy, with the exception of these 3 guys down here, fired off a few trades today. Lots of variety in there. So, 23 trades up 3 points. Just in and of itself, that's a pretty great total. Of course, depending on where you trade and what you're paying for commissions, that can affect that rate of return. Don't want to get too far off onto that tangent right now, but it is a pretty interesting topic when you start adding up all those commissions. So typically, we've got a couple of different things that we like to focus on when we go over the Holly trades. One of those things is, how do we know when to go risk on, per se? When do we know that a setup is looking conducive enough to where when we see Holly get out, we decide to stay in? And a lot of the times, it's really not that hard to come to that conclusion, especially if you've been coming to these webinars and seeing the methodology that we use. So let's talk about some of those that were out there today. So here's the entire trade blotter for Holly. And what we're going to do here is simply sort by risk on today. And perfect example right at the top of the list here. These 3 right here are perfect examples. BOFI and USAK are both going to be what we call deciding to go risk on. And CRC is going to be an interesting example of 2 different things. This one fits the mold of kind of, risk on, and at the same time a trade around as well. And we'll get into that in just a moment here. But first, let's take a look at USAK. And of course, we're looking at 5-minute candles here, and we're going to have the daily over here as always. So we can see I've taken the liberty of already marking up the charts here. Drew a line straight across from Holly's entry price, which was $9.65. So notice that when I double click and we populate the chart, entry price $9.65, it's also going to paint a nice blue box for you on the chart for that entry price. So we can see, approximately, not quite 2 hours into the open, Holly says she's going to take a piece of USAK long. And we can see right here is where that signal occurred. So first and foremost, USAK, wake-up call, was the strategy that issued that symbol. So we take a peek down here at wake-up call. Where are you, wake-up call? There you are. Okay, so statistical probability, why it's so important, and yes, most people aren't factoring statistical probability into their trading game whatsoever. Now, if we know right off the bat Wake Up Call is issuing this trade, and we can look over here and go, okay, expectations. Coming into the session, anything out of Wake Up Call, 56.5% chance of working, according to the 40-day backtest that Holly has been performing on it. So right off the bat, we know, well, we've got more than a coin flip chance here of this thing doing what we think it's going to do. And for those of you who might be out there wondering, well, man, 56.5 as opposed to 50-50 on a coin flip, is that really enough of a statistical advantage to get anything done? Well, Las Vegas has this game called roulette. It has 0. It also has double 0. Now, the reason it has double 0 is because if double 0 was not there, you'd have pretty much a 50-50 chance at hitting red or black, odd or even. Well, see, that's no good for the house. So they pop the double 0 on there, which gives them just a slight advantage, over 50%. So they know that on the long term, they'll win. If double 0 went away, you wouldn't see roulette in the casinos anymore. So right off the bat, we know 56.5% chance of working, but then we bring our human element into the game. So we rely on Holly for the statistical probability. She delivers here. So I know it's got a good probability right off the bat. And then I also notice, wow, this thing is exhibiting a pattern that I like to trade, which is a range break. You know, it's popping above this plane here. You know, if I drew another little line right across here. So I'm like, okay, not only is Holly saying it's just statistically inclined to go my way, but it's also experiencing a little breakout. So therefore, I have statistical probability and a conducive pattern both lining up here. So it's really not that hard of a commitment to go, looks great from a technical standpoint. Holly's telling me it's statistically inclined. Sure, I'll pop into a couple of hundred here right off the bat. And then we can see, we get a little gyration, but then it's off to the races. Now keep in mind, this is the stop loss, 945 right here. So obviously it never comes close to our stop loss. Now let's talk about the risk on, risk off factor. Now we can see here in the risk off column, Holly exercised her profit save, and we look at the exit reason right here. Profit save, I'm getting out. I'm going to take my 8 cents. So when we look at the entry time and the exit time, 8:36 trade was initiated. Holly bails on it less than 10 minutes later at 8:44 because sometimes that's what she does if we get some wickiness or some volatility shortly after the entry. Now, the reason we gave her the ability to do that is because we can't let Holly have a winning trade turn into a losing trade. Just like if you're a trader and you're constantly letting winning trades turn into losing trades, you're not going to be in business very long, all right? So Holly's strong suit are the entries, and if we see Holly getting out, exercising her profit save functionality, we're like, it's nowhere near the entry price or the stop loss price here. Therefore, I feel comfortable staying in this trade. So I acknowledge that Holly's getting out, obeying all of her rules in the risk off mode. However, I, as a trader, am going to go risk on. Or maybe I even do something as simple as this in the beginning. I'm in 200. I see Holly get out. I'm gonna book my profit just like her on 100. I'm going to keep the other 100 and give it to its stop loss. All right? That's a way to split your risk up and to capture more alpha because Holly's not the smartest at trade exit. It's the entry that is her strong suit. So by man working with the machine, we do have a very conducive hybrid system that can be used effectively here. So, you know, once we're past the point up here and we're getting into the money, well, you're still faced with the question, okay, you took 8-cent profit on the first 100 with Holly. Now you're up significantly on a percentage basis, almost a full point on a $10 stock from 965 up into these areas up here. What are you going to do now? Well, we've got a simple way to help you figure out what your expectations may be. because we get the question all the time, oh, well, it looks like this software is just for day trading. What about swing trading? Well, entry is the first part of the equation, and it's kind of an important thing. We like to be in the money because last thing you want to do is go, oh, I'm down in this position. I guess I'll just hold it overnight, see if we can get a gap up. You know, that's another very quick way to go broke. So if we're in this thing up here and we're still in 100, boy, I'd sure hate to sell it here and then have it rip to 11. Well, if we consult the daily right here, very interesting event going on here. It's popped out of this little initial range right here, and now it's stopping at this little, this is acting as the next resistance level right here. So when you see this happening, this is very similar to the trend change lubricants that we've been talking about and delivering to people on, the Monday webinar. Got some very good examples of this exact same pattern that I'll show you shortly, but from an intraday signal, and we're in the money and we're trying to figure out what are our expectations. Well, if you're in a situation like this, depending on what the market does tomorrow, we get above this little level, then, who knows, this could be the next stopping point. Or if it gets above there, then this could be the next stopping point, right? And at the best case scenario, we get up here and here, it could be off to the races because we just have to keep looking back to, establish expectations. All right, so USAK, great trade today. Fantastic trade. This Bofi, once again, Vintage produced this one. We know that Vintage coming into the session, 57.7%. However, it did kick out 3 trades today, and it, was batting 1,000, 3 for 3, or 100% here. So, once again, hey, looking very similar to what we saw earlier. Here's the entry price. Once again, butting up to the potential range break here. We see a nice little stable area here, which tells us, hey, this run up, there's buyers in it. Buyer takes a break. Buyers and sellers become equal for a short amount of time. We could also call this a mini consolidation, micro consolidation in our 7 pattern. It's all the same. So we take a couple of hundred with Holly here, and then boom, 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 off to the races. Never even acts like it's going to come have a visit with our stop loss here. So once again, when we look at how Holly managed the exit, once again, profit save is the reason. Exit time here, let's see. So Holly takes what, 16 cents on the thing, so 27.69 on up to what would that be? A little bit into the 80s here. But ladies and gentlemen, look at this little run that we went on. If you're in the money here and Holly peels out, once again, you're like, well, we're just going kind of nice little staircase up here. I don't really feel the need to get out. Or sometimes we have to satisfy the demons that reside on our left and right shoulders. One's called fear, the other one's greed. So we can easily quiet those demons by going, okay, Holly's getting out. I'm going to peel out of 100 here. I'm going to hold my other 100 and see what we have in store here. Of course, same scenario. You get up here, what are you going to do? Well, what are my expectations? And this one's really interesting because if we zoom out, we can see all the way back to the left here. We closed here pretty much right here today. So if we did decide to hold some of this overnight, we're going to take a risk, and then what's going to be the next stopping point? Well, we could just start drawing our lines here, but once again, to see this thing breaking out of this former little area right here, if you're a swing trader, those are certainly things that you want to pay attention to so that you can have realistic expectations on, is this thing going to bump its head quickly, or does it have a little bit of room to run? Okay, so now let's talk about CRC. And when I first looked at this chart today, I'm like, okay, something's wrong here. And then quickly I realized, no, Nothing's wrong at all. Everything functioned perfectly. So we see CRC here, issued right about the 8 o'clock hour. Here's the arrow. Already took the liberty of drawing the line from the entry price. And when we look at Holly on this one, it's a different story because once again, she gets in right here, and I believe she was in this trade right here, entry time 8, exit time 8:06. So she got in here, she got out up here. Took her 9 cents. And then look what happens. This time, this one rolled over and smacked its stop loss. Of course, she was already out of the trade, so that's why we're not seeing a stop loss hit here. She went ahead and got nervous and took her 9 cents. Now, a lot of the times what we'll see is a stop out, so we'll see a loss here if it hit that stop first before she decided to get out. So we get in the habit of doing this. Once we see Holly in a red position or a stop out, or we see something like this, where it goes below the stop price, stops out, so it's back below the entry price. So what I like to make people aware of is that this statistical probability, it's not just good for the exact point that the trade was issued. The probability is good for the day. So sometimes they go immediately, sometimes you get stopped out and they never see that price again, but sometimes it takes 2 or 3 excursions through the entry price. So on this one, Holly gets nervous, takes her money, it goes whoosh, comes back up, but when we see a position in the red, we just come up here and we set a price alert so that we're alerted the next time it makes that excursion. I've drawn a line, but we would create a price alert, obviously, so that you would be alerted. So it takes a little snooze here. And, the chart tells the story. Well, it went down here, and we've got this long, big wick thing. What does that mean? Well, the sellers tried to take it down, but it didn't stay there very long. That's why we see the wick. Now buyers and sellers are equal. Buyer comes back out. Second excursion from the time that Holly called it. And look, another opportunity that holds this time. You could use the same stop loss, but the bottom line is second excursion here. Then if we draw a line like so for easy reference, takes a little breather, then pops that range break again for a little bit more push. So a lot of the times you can still take advantage when you see Holly get stopped out of a trade because the timing was just slightly off. Didn't go on the first one, took a small excursion down, but the second time it popped that level, it actually went. So a lot of the times we can extract additional alpha from this risk on column here by simply staying in when Holly gets out or by working a trade around just like this CRC. So that's pretty much the highlights for Holly today, and just getting into that very simple methodology of participating and deciding to go risk on or risk off for half the lot, maybe risk on, for half the lot risk off. It's a very simple, even keel way to get into this type of trading methodology, and when you know what you're doing all the time, trading becomes a lot more sane. So Andy, that's pretty much it for Holly today. Once again, a very stellar performance, lots of nice even-keeled setups to deal with today, so we'll see if there's more in store for us tomorrow. And it appears Andy has left the building.
I forgot, dude. I'm mute.
You're over there talking to yourself.
I was, of course I was. Did you answer David's question? He had a question about how the stop losses are determined. I think that's probably good for people to know.
Oh yeah, absolutely. Of course, we have limited time, but of course you can see all of these columns. I mean, we've got lots and lots of data up here. So yes, how is the stop loss determined? Well, every strategy has its own hold time that we can see right here. The amount of hold that it's designed for on the intraday level. But how is the stop loss determined? So if we come over here to the trade blotter, you can see, like, for example, when USAK was triggered, the smart stop column is reflecting a smart stop for that particular trade of 25 cents. Now, of course, on BOFI, you can see completely different, 32 cents. So the smart stop is something that we developed quite a while back, try to take a more scientific approach to establishing a stop loss for each and every stock instead of taking, a strategy and developing it and saying, okay, across the board, we're just going to run a 50-cent stop loss. Well, 50-cent stop loss is a lot different for a $10 stock as it is for a $50 stock, obviously. So what Smart Stop does is it looks at two factors, I believe. Relative volume at the time that the signal is generated and the 15-minute volatility of that stock, and multiplies the two together. That's how it arrives at the Smart Stop value based on volume and volatility for that specific stock. So I hope that answers the question.
No, that did. Very, very good. Very good.
Where is the data coming from, and how is it populated? Well, is that data for the entire Trade Ideas suite? Because we get our data from a vendor of market information, and then we organize it and kick it back out to our users. Market data is available through many, many vendors out there. Well, Dave, let's see. How many shares? Well, how many shares you do is a function of how big your account is, right? And, we talk about this a lot in training sessions with new people. You might have a $30,000 account that each and every day, you can make, you can be in 6 trades of $5,000 a pop, right? So share size is going to be dependent upon your account size, I would think. All right, so Andy.
All right.
Did you have one additional topic to get through here, or
no? Yeah, I do have another question. Yeah, we have lots of questions coming in this evening. So I do have a question here from Gary. He says he's a conservative trader, only 100 share lots, being a swing trading. I love to merely focus on filling gaps, which I think is very good, Gary. There's a lot of opportunity, and we've had a couple of trade of the weeks with gap fills that have worked out beautiful. And so I am, too, a big fan of gap fills. Basically, and he goes on, and he's just wondering if the products in Holly is for him, if he's only... yes, Gary, I mean... you have to remember, Trade Ideas is much more than just Holly. Much like that top list I was sharing with you, that's just one of very many customized alerts that we've created here at Trade Ideas. And we share everything. All you have to do is ask, and we will share you any of our what a lot of companies would call proprietary, configurations. We're not that way. We share everything with you. And you can design these alerts pretty much. If you can picture a pattern in your head, you can pretty much design an alert, for yourself. So yes, the product you need. I think everybody needs something. In the day that everybody has all this information and data flying around and high-frequency trading and algorithms, you need something, to give you an edge, and that's what this product does. It gives you an edge. I've been using it for 13 years. And I'm telling you, on the few times it's went down, and it hasn't been very many. I can count them on one hand, in the last 14 years. And but I felt naked without it because you get to depend on it so much. So there's so many ways to configure and set up your alerts, to find opportunity in the marketplace. And it's so much more than this Holly. Don't get me wrong, Holly is a huge part of it, but a lot of it is creating the alerts, that will help you find opportunity.
Right, Andy, and there was a question about, do we have VWAPs? So I just quickly pulled up an alert window, went to the search field, typed in VWAP. We've got VWAPs in alert form. We've got distance from VWAP filters. You can play around with some of the custom aspects of the VWAP as well. So, yeah, We do VWAP. As far as options go, for the other question, these are the only option filters that we currently have. However, let's say we come over here to the channel. Where's my options channel, Andy? There we go.
Oh, I'm sorry. I pulled up the.
There we go. But what I did just now is I clicked on the options channel. So you see your two charts up here, but you'll see this window, unusual options volume for today, moving higher with unusually high options volume. You want to see the highest call volume stocks over here. Stocks with the highest put volume over here. How about option volume plays of 300% or more? You can watch this window. So while we're predominantly for equities, we do have a handful of options filters for the basic stuff.
Very good, Jamie. Yeah, if you want to pass it back over to me, I will. I'll give them a little, well, actually a lot more than of what Trade Ideas is all about before we hand it over to Scott.
Yep, here it comes. You are good to go, sir.
All righty. All right, guys. Let's see, present here, and yeah, I just want you guys to know the people in here who are looking at the product and kicking the tires and getting coming in here to get an idea of what Trade Ideas is all about. I want to let you know it's a lot more than just great alerts. We have an incredible community with exceptional support, education, training. We have a trading room that's free for everybody. That's hosted by Barry Einerson, and he does a really good job in there of actually showing you the software, explaining, actually making live trades out of his own account, calling his trades, and just does an incredible job answering all the questions he can about the software. We also provide webinars much like the one you're seeing right now, where we answer questions for you. We exhibit the software for you and with some great alerts. We got them every day of the week at 5 o'clock Eastern time, so it makes it easy now for everybody to attend. That's, I should say, Monday through, not every day of the week, every day but Friday. We have them Monday through Thursdays, and you can see the names over there, who they're hosted by, and so there's just an incredible amount of education and training that you can get out there. And we don't stop there, guys. Scott's going to come on here in a minute and give you a discount, and I want to tell you what comes with that. If you subscribe to Trade Ideas, you get what's called the one-on-one hour of power training. That's either with me, Jamie, or Steve. All of us very well educated with the software. We know the software. We've been using it forever. Like I said, 13 years. And not only that, we know trading. So this right here on our site, for those who want a second one, is a $99 value, and you do get that free with your subscription. So if you want to come out and check the product out, you will get you know, a one-on-one free hour of power training, and we will help you build alerts, set up your default layout. You will come away from there really feeling good about what you have. You know, the power that you've harnessed the power now enough to use it and move forward in your trading. It's a great session, and I've got so much good feedback from it. So, you know, with that said, Scott, if you want to come on in here and tell them what they can get as a discount for this product, come right on in.
Yeah, thanks, guys. Yeah, good presentation today. Very engaged audience. Something we like to do to thank everyone for attending is to give a code to let you save if you're either planning on subscribing or upgrading. So the code that works for the Trading Studio webinars this month is Advantage, all caps, just like you see on your screen. That'll take 15% off your first month or year of premium, which is great, or even 10% off your first month or year of standard. Another good way to get started. Both standard and premium have real-time data, includes all your exchange fees, Trade Ideas Pro, complete access to that, charting, all that. The premium is differentiated by having access to the AI named Holly, artificial intelligence, Also, unlimited backtesting using the OddsMaker event-based backtesting tool, and other advanced features like the shareable price alerts, which have been very popular this year, super useful to the traders, and advanced windows like red bar ignore, green bar ignore. Both premium and standard come with a full hour of one-on-one training. So as soon as you become an active subscriber to either standard or premium, go ahead over to the support section and click on training. And there's a calendar interface there for you to go ahead and pick the best time and date with one of our expert educators, including Andy Lindloff or Jamie Hodge from today's webinar, or Steve Gomez, another one. And sometimes Brad Williams also takes on some training too. But that's a fantastic way to get started, and gives Trade Ideas Standard $99 a month starter with that 10% off, just an outstanding value. So go ahead and use Advantage, all caps, at trade-ideas.com/price. And if you have any questions about doing an upgrade or any questions for us regarding Trade Ideas, go and email us at info@trade-ideas.com. That's the best place to get in touch with our support. Or you can also email Andy directly, Andy at, or Jamie is J Hodge. His is first initial, last name. The phone number is great if you have a subscription or billing issue during normal business hours, but info at is the best place to send your technical questions or use questions. You can follow Jamie Hodge at QuantBot on Twitter. Steve Gomez is at Today Trader. Dan Merkin, our CEO, is Trade Ideas 1. David Afariat and the corporate account is at Trade Ideas. Trade Ideas Pro on Facebook.com is where to find us there. If you like us on Facebook, if you're on the Facebook, you may as well just do that anyways, and you get some new things across your feed from us. We post different content there sometimes. So thanks everyone for showing up. This will be uploaded and available in our YouTube channel a little later on this evening, and you get an email tomorrow with a note of where to find that playlist. Thanks, Jamie and Andy. We'll see you all next week in the webinars.
Thank
Hey,
you,
thanks
Scott.
everybody.
If anybody missed that swing trade, just send me an email and I'll send it to you, Andy at trade-ideas.com. I saw one person in there miss it. All right, guys. Thanks everybody.
Thanks everybody. Andy.